investors, I have another exciting video today for you. And anyone who knows me knows I love stocks because you just need a few of these in your portfolio to make a big difference. Now, I'm sure you've heard the saying, invest in what you know. Odds are your significant other, your kids, or even yourself are a user of this everyday product, but you probably never consider the stock. Well, today we're going to talk about E.L.F. Beauty, a stock that led the market from the depths of the 2022 bear market, resulted in nearly a 10x move in less than a year. We will discuss the humble beginnings of a company trying to make it into the competitive world of beauty products. We will unfold what made the product so different and why it appealed to so many consumers. And finally, how this growth played out in their financials. And as a bonus, we will talk about a technical mark that you can use today in your process. That was a big clue before E.L.F.'s monster move. And after watching this video, a person can get excited about finding the next E.L.F. Beauty. Nothing contained within this video should be interpreted as a recommendation to purchase, sell, or hold any security at any time. Always consult with an investment advisor familiar with your specific situation before you make any investment. We do not provide investment advice. This video is for entertainment purposes only. Hello, I'm Brian Cota, founder of 4387 Capital Management. Thank you for joining us today as we unwrap the E.L.F. Beauty ascent from the last few years. We've all heard the saying, invest in what you know, and boy, this one was right under our nose. It's easy to get caught up in Bitcoin or the latest semiconductor stock, but everyday investors could have made a small fortune on this everyday product. E.L.F. wasn't a turnaround, it was a pure growth story that had a lot going for it. And the writing was on the wall for savvy investors if they took the time to understand the story and the economics of its business model. What makes this business so wonderful but challenging at the same time is the economies of scale. Once you cover fixed expenses, any incremental revenues fall to the bottom line. In the meantime, however, it takes a ton of investment to scale, and the risk becomes scale may never happen. But if you are the special company that hits all the right archetypes and becomes the thing, it's a massive win for shareholders. So let's open up our eyes and see what was going on with E.L.F. Beauty. Based in Oakland, California, E.L.F. was founded nearly 20 years ago. E.L.F. Beauty started off with humble beginnings, working hard to break into the cosmetics market. But over time, it was able to innovate and stabilize itself by providing a value proposition that no one was doing. A renegade brand with the crazy idea of selling premium quality cosmetics for just $1 over the internet. Their goal was to make the best of beauty accessible to every eye, lip, and face, hence E.L.F. Beauty. So what made them so special? First, their products were 100% animal-free with clean ingredients, which is desirable for many consumers, and this presented a competitive advantage. Second, as the beauty industry evolved, so did E.L.F.'s marketing strategy. Embracing a digital-first approach, they became pioneers in harnessing the power of social media to engage consumers like never before. From viral TikTok challenges to collaborations with cultural influencers, E.L.F.'s marketing engine moved at the speed of culture, captivating audiences, especially Gen Z. This is important because it drove consumers to their website, providing better margins when compared to selling through retailers such as Ulta Salon. E.L.F. remains the only top 5 brand today that has a direct-to-consumer site. Finally, and what I believe to be their secret sauce, is they modeled successful products after prestige brands, and then turned around and offered alternative premium quality cosmetics at a substantial discount. E.L.F. exploited this consumer market arbitrage and was rewarded. For example, they introduced a unique version of a prestige brand's primer, and they called it Poreless Putty Primer. But what's interesting here is the prestige brand sold this product for $52, and E.L.F. sold it for a jaw-dropping $8. This product was so popular, it eclipsed the prestige brand 9x in unit sales after its release. Now let's do a deep dive and understand what the stock was doing at this time. Even after all this positive momentum for the business, the stock was just trading sideways during the bear market. But it left a big clue, and it is something that I look for in all my investments: relative strength. Many growth investors abide by the philosophy that the strong stocks get stronger and the weak stocks get weaker. This blue line is what's called relative strength. It measures the stock's performance against the S&P. Well, E.L.F. was screaming, "Buy me," as this line in blue showed how strong it was relative to the market. This is a big clue, especially during a corrective market. It's a clue because you want to look for strength in a sea of weakness. Now, we all know it can't be that simple, and it's not. Some stocks exhibit relative strength because it's a defensive play in a bear market, for example. But screening for strong stocks in a corrective market can be gold, as it was in E.L.F's case. Now for the inflection point. E.L.F announced earnings in August of 2022, just before the bottom of the 2022 bear market, and the stock was up 12% for the week. These charts show the sales and earnings per share growth of the company at that time. The red line denotes when the company reported earnings. What's important to notice here is that the breakout preceded the earnings and sales ramp. Savvy investors that did their homework understood the company had significant sales and earnings momentum, and the business was hitting scale. It was only a matter of time before the stock would respond. At this point, the market had not yet bottomed out from the 2022 correction, but the stock traded quietly along the magic 10-week moving average, which is a key support level for professional and institutional investors. This is a point where you, as an investor, could have bought shares. And after a long 30% market correction, the stock was primed to move higher. E.L.F was a simple stock to hold as it respected the 10-week moving average along the way. In addition, the relative strength line continued to trend higher, showing that it had the potential to be a super winner. Investors could have considered selling shares in September of 2023 as the stock broke key support. At this point, the initial move lasted for almost a year and was long in the tooth. At some point, the stock had to take a breather. Since then, the stock found support at the 40-week moving average a few times, which is a long-term area where mutual funds and institutions love to take advantage of the stock's weakness and add to their positions. For now, it's digesting its monster move. As we conclude our discussion of E.L.F Beauty, it's natural to think of the key lessons learned from this video, to the point where you might be getting excited about the potential of finding an undiscovered gem. The lesson for me is it's easy to get distracted on the hot new semiconductor stock, while a product many use every day leads to a massive winning investment. What is shocking is how simple their concept was and how it was able to completely disrupt a protective moat of a legacy industry. It leads one to think, what other companies exist today that may break the glass ceiling? Share your thoughts and insights in the comments below. And remember, it's not important to remember everything said in this video. Just listening and taking away key points is enough. What did you learn from E.L.F Beauty's remarkable ascent? Provided in the link below, you can sign up for more compelling thoughts on the market. Please like, share, and subscribe to our channel for more investor content and market insights. Thank you for joining us today.